What's up guys, welcome back to another video, and the purpose of today's video we're going to run through the deep crab harmonic pattern. So if you head over to my website ottrades.com, go to the patterns tab at the top here, and we've got a list of all of the advanced and harmonic patterns and a video breakdown of each of these patterns under each of their tabs, as well as a diagram here and a breakdown of the trade setup, how to identify these patterns, and how to manage the trade as well once you're in that. So to get started, like all of these harmonic and advanced patterns, we're going to start off with our X to A leg. This is just the initial price swing. The start of the pattern is not constrained by any Fibonacci ratios at all. It's literally just an initial price swing. So in this example, we've got a bullish move, so a move to the upside. And this is going to determine the eventual reversal of the pattern. So at the D point here, we're going to look for a reversal in the same direction as this X to A point. So in this instance, the X to A point is bullish, so we're going to look for a bullish reversal for the end of the pattern. So the first level that we're going to look for, defined by Fibonacci ratios, is the B point. As you can see here, the B point is formed by fulfilling a precise 886 retracement of the X to A leg. Now again, with all of these harmonic patterns, the term precise here doesn't mean that it hits the 886 exactly. It doesn't have to do that. The term precise means that it's closer to one Fibonacci level than the other. Therefore, if the retracement is 1 pip more than 836, which is halfway between the 786 and the 886, then it's treated as 886. If 1 pip less than 94.3, which is halfway between the 886 and 100%, then it's treated as 886. Don't let that confuse you, so let me just give you an example of that here using that 886 level. So stretch it from X up to A, and we're looking for a precise 886 retracement. So again, I'll leave it here for now, exactly on that 886 level, but the precise word here, the precise word here, that does not mean an exact touch of that 886 level. So what it said here was the 83.6 and 94.3. So I'll put those on, 83.6 and 94.3. Okay, so that 83.6 forms exactly between midway between the 786 level and the 886 level. So 786 and 886 are two Fibonacci retracement levels, two of the core Fibonacci levels here. So exactly between those two levels is the 836 level. So the price must exceed this midway point, the 836 level, by at least 1 pip in order for it to be 1 pip closer to the 886 than the 786. If it exceeds the level by 1 pip, it's defined as a precise 886 retracement. And the same can be said for this 94.3% level. It's got to form 1 pip higher than this level to be 1 pip closer to the 886 than it is to 100% retracement. So it's got to form within this green zone here. The price has got to enter this green zone here in order for this B point to be valid. I hope that makes sense, guys. So if I just get rid of all of this, that is defining our B point here. So a precise 886 retracement of that X to A leg. Now next is a C point, which is valid if it touches at least a 382 retracement of AB and does not exceed the A point. And again, this is very common for all of these patterns to have this broad Fibonacci range for the C point from 382 to A. So we're looking for price to enter from the B point anywhere between 382 and it cannot exceed A. So quite a broad range here, especially with this A to B point being so deep. Obviously the Fibonacci ratios, the retracement tool has been stretched quite a distance here. So that increases the range between that 382 and the 100% level. So at the 382 level, we can have price exceed this level, so long as the wick enters above that 382 level. Even if the price then comes back below it and the candle closes below it, that's still valid because price has exceeded that level with the wick. that is still a valid pattern. Now that can happen here, obviously we can close above it. Price can continue to move higher up to the 100% level. However, price cannot exceed this 100% level or the A point. They're both the same, 100% or the A point. So price cannot exceed this. So similar situation as we had down here at the 382, where the wick exceeds it and price closes below it. If the wick exceeds this, that is now an invalid pattern because price has entered the range above that 100% level. That's now invalid. So even if the price exceeds this and then comes back down to close below the 100% level, that pattern is now invalidated. So just for the purpose of this video, I'm going to leave it at the precise 786 here, this blue line. Let me get rid of these two just to clear things up a little bit. So just to illustrate that, price can form anywhere between the 382 and the 100% level, cannot exceed A, so price has got to come within this green box here. As long as price falls within this green box, then the pattern is valid, and that's for our C point. Now where within this box the pattern forms is going to dictate the third point of our potential reversal zone for the D point. So it's important to remember this when you are working out the C point here. So just bear in mind that our C point formed at a precise 786. Again, the term precise means it could form anywhere between halfway between the 618 and the 786 and halfway between the 886 and the 786. As long as it doesn't exceed halfway or fall below halfway, that's still a precise 786 retracement. So I'm just going to leave it at exact 786 just for now, just for the purpose of this video. But bear that in mind, we'll cover that again in a second. So finally the D point then, the potential reversal zone. So unlike advanced patterns, the D point is now a zone. It's made up of 3 Fibonacci retracement or extension levels. The potential reversal zone is calculated as a combination of the 161.8 extension of X to A, so 161.8 extension of X to A leg. So if we get our extension tool, go from X to A, a bit higher on that there, and we want the 1618 here. Okay. So 1618 level, if I draw this in a line, 1618 level, 1618 of the X to A forms our first point within our potential reversal zone, or PRZ. And the next level is going to be coming in at the 1272 AB equals CD movement level. So this is the same distance as 127.2% of A to B leg, but this should be copied across and measured from the C point. Now again, don't let this confuse you. All that's saying is we get our extension tool, we measure 127.2% of the A to B move. So get rid of 161.8% and get 127.2%. So the 1272, that's 127.2% of this A to B move. So obviously A to B is 100%, plus 27.2% is that 1272 extension of the A to B leg. Now all that says that 1272 AB equals CD, all that means is that this move down here, so from here to here, that whole move there, let me just highlight all of these, should be dragged and measured from the C point now. So that distance is dragged and measured down from the C point. So I hope that makes sense. Let me get that exactly on the C point there. So this was our original A point, this was obviously our original B point, and this was 127.2% of that move down. So now we can draw that in. So this is now our second point of the potential reversal zone drawn in. Finally, we've got our third point to draw in, and this is where that C point comes into play. So the precise, ours was a precise 7/86 of that A to B move. So all that's saying is, depending on where the C point forms between this A to B leg, it can form again anywhere between 382 and 100%. So we've got, if it's a precise 382, then we've got a different extension level of B to C for the final point of the potential reversal zone. If it's a 50% of the A to B, then we've got another different one. 61.8 and 70%, then we've got a different one. 78.6 and 886, then we've got a different one. Obviously, this is going to vary because if I just give you an example using the extension tool. So from the precise 786, remember that ours was a little bit higher. Sorry, mouse got stuck there. And there. So precise 786, we're looking at the 1618 of the B to C, 1618 extension of the B to C if the C point is a precise 786, which ours is. So let's get the 1618 back on. You can see that forms very close to our 1272 AB equals CD move. I'm just going to copy this down. Here. And that forms the final point of our potential reversal zone. Now obviously if the C point, let's just do an example, if the C point was 382, then because the distance between B to C is going to decrease, so let's just say that was a 382, probably about there, might be slightly higher up. 382, not a bad guess. So 382 is about here. See our 1618 level moving down, it move slightly higher again if I do this. So 1618 level of there is obviously going to make that PRZ rather wide, so we're going to have a large range to look for a reversal zone. We don't necessarily want that, so we want things to correlate with our previous swing, that B to C move. So obviously if the B to C is precise 382, we've got 2618 of the B to C leg, rather than the 1618, which we had at that 786. So this is obviously going to bring this lower down back into our original area 2618 here. So that's going to bring it pretty much bang in the middle between that 1272 extension AB equals ED and the original extension of the X to A leg. So that would be where it forms if it was a precise 382 of A to B, forming that C point. So I hope that makes sense. Ours was again originally 786, so I'll leave that there. So this zone here, based on our ratios, is the completion point of this pattern. This is the potential reversal zone, and that is our D point here. Again, like I've mentioned with all of these harmonic patterns, the pattern is technically not completed until price has exceeded the price extreme of the potential reversal zone. So the highest, so in this instance we've got a bullish reversal pattern, so we're looking for price to reverse to the upside or bullish. So in this instance the price extreme is going to be the lowest price in the potential reversal zone. If we had the pattern the other way around, if it's a bearish pattern, so we're looking for price to move to the downside upon completion, then we'd be looking at a price extreme to the upside, so we're looking for the highest price within the potential reversal zone. So in this instance, the price extreme is the lowest point, so the pattern's technically not completed until price exceeds the lowest point within our PRZ. However, you would still look for buying opportunities depending on how your appetite for risk, whatever. You still look for buying opportunities within this zone. However, the pattern's technically not completed until it reaches this level, but it's called a potential reversal zone for a reason. You would still look to enter the trade if you see a reversal pattern forming within this zone here based on your back testing. So now to just put in the stop loss level, 213 extension of X to A. So we're going to go from, get our extension tool from A onto X, back up to A. We're looking at the 213. So our stop loss is going to go down here. So this is our stop loss down here. So you can see, even if price exceeds that D point, so the pattern is technically then completed. If we continue this push down and it just moves straight through our potential reversal zone and continues lower, that doesn't mean that we should automatically just stop looking for reasons to enter the trade just because it's exceeded our potential reversal zone. The reason we've got a stop loss down here at this 213 X to A leg, the reason we've got a stop loss down here is that is where we're saying that we are wrong. So this pattern is no longer valid. We're no longer expecting the pattern to reverse. We're no longer expecting price to reverse. If price breaks through this level, the chances of this pattern working now are slim, so we're expecting price to continue lower. Hence why we've cut our losses, we've got out of the trade at this point here. So technically this is the pattern invalidation point. So why would we stop looking for entry reasons below the potential reversal zone if our pattern is still valid? Technically it's not been invalidated because it hasn't hit our stop loss level. If anything, you're better off looking for reversals in this area here because it increases the risk to reward ratio. So if you have entered up here, for example, and now's a good time to put on our profit targets, again 382 and 618 of A to D, like they have been on all of the other patterns, A to D. So if you've entered within our potential reversal zone, say you get a candle close around this level here, you've entered here, you're looking at a 90 pip stop loss. You see 90 pips there, 90 pip stop loss, and an initial take profit target of, call that 75 pips. So you're less than a 1-to-1 risk to reward ratio. And then finally 130 pips for your second targets. However, if price moves, keeps moving lower before inputting a reversal pattern, so if price moves lower towards our stop loss before inputting a reversal pattern, let's just say we get an engulfing candle which closes up here somewhere, you're now looking at a 30 pip stop loss. Let's measure it from there. So you're now looking at a, call it 18 pip stop loss for your first targets to be 112 pips. So a massive difference in the risk to reward there. You've gone from a negative risk reward to massively positive risk reward ratio there. Obviously, if you do get a nice clean setup in this PRZ, then you're obviously going to take it, depending on your back testing. You're going to wait for your results. Even if you get a clean setup and you get potentially hit first targets, move your stops to break even and get stopped out, you can look to enter the trade again. If it doesn't exceed this invalidation level, that might be in your trading plan. I don't know. It's up to you. You need to back test this yourself. But as shown there, guys, the initial targets are 382 and 618. If price reverses and it hits our 382 target, our initial target, we're going to take half of the position off of the table. We're going to take half our position in profits, and then we're going to move our stop loss from down here and we're going to bring it up to break even. So the point of doing this is we've secured our profits by hitting our first target. We've taken half of our position in profits. With our stop loss moved up to break even, the only direction price can go in now is either down and cut us out of that trade at 0. So we've taken half of our profits off and the rest of it has just gone to 0. So we haven't lost anything on this trade, we've only taken half the profits. Or it can continue higher and take our second profits off the table. So once we've hit our first profit targets, move the stops to break even. It's now a risk-free trade. So you're just looking for either extra profits or just to secure what you have at the moment. I hope that makes sense, guys. Now, as mentioned before, if price continues lower before inputting our reversal pattern, or whatever you want to call it, our reversal candlestick formation, something like that. If price moves lower, then we need to stretch our Fibonacci retracement tool to the newest price extreme. So you need to stretch, in this instance, because we're looking at a bullish pattern, we need to stretch our Fibonacci retracement tool down to the lowest point the price reaches. Even if it comes this close to our stop loss level, we need to keep stretching that Fibonacci retracement tool down until we're either stopped out of the trade or price eventually reverses to hit our targets. The reason for doing this is the Fibonacci retracements, they take into account entire price swings. So the market doesn't care that you've got into a buy signal here. The market doesn't care that you've bought the market here. If it continues lower, it's still going to take into account this entire swing. It doesn't care about your situation. So you need to bear in mind that you need to take into account the entire price swing that the market's inputted, okay? So even if you get in the market up here, price reverses slightly and then continues lower. So you already bought the market here and price has already started moving towards your profit target, and then reverses. You need to then re-stretch your fib levels down to here, and then price will eventually either reverse and hit your targets, now at a lower price. So if we've stretched our fibs down from here, obviously our targets are now lower than they were before when we had the Fibonacci tool stretched to here. See, they're higher up than here now. Stretch them to the new price extreme. Our targets are now lower down. Price is either going to reverse and hit our new targets or continue lower, of which we would stretch our Fibonacci retracement tool along with the price until we're either stopped out of the trade or price reverses. Hope that makes sense, guys. So that is the harmonic deep crab pattern. I hope you've enjoyed this video. Again, go onto my website and check out all of these patterns. They're all on there for free. All the information's on there for free. All of these videos are on there for free. OT software, check that out as well. Watch the free video on that. This is my software that I've developed myself. It identifies all of these harmonic patterns that we've gone through and all of the advanced patterns, as well as 3 custom patterns that's all explained within this video. So yeah, go ahead and check that out as well. So like I said, hope you've enjoyed the video. Thank you very much for watching. I'll see you in the next one. Cheers. Ta-da.